Times the big three. 3 stocks, 3 charts, 3 trades. Ben Lichtenstein will take us through the charts. Here to take us through the trades, Alan Nuckman, Chief Market Strategist at BullEyeOption.com. Good to see you both. Alan, new year, new ideas. I don't know. You tell us. How are you feeling about 2024?
Well, I think people were still celebrating those first couple of weeks. I think people were celebrating those first couple of weeks of the year after that epic momentum move that we saw in the market. And to address your last guess, why fight the power? That's the market's strong. Now, let's see what happens when we take out the all-time highs at 48.18. On Friday, we were within a few points of that all-time record and backed up a little bit, but that's still 2-year highs. So I don't know if anyone can complain. This is a price pause, but we are in a strong bull market.
I see. And we see you at the airport. Thank you for always making sure you are on time for our hits. And Ben and I, the whole team, we'll all meet you somewhere warm and fabulous. I don't know. Okay, well, have a good, safe trip wherever you're going. In the meantime, Intel's the first name on your radar today. Alan, tell us about that.
Well, Intel is a Dow stock, but number one, I've got glasses on my head, someone should have told me that. It's a Dow stock that's been down 17% over the last 2 years versus the Dow obviously is positive, making new all-time highs. So, it's a stock that's not dead yet. If you remember just a year ago, people thought this stock was done. It was at 25 in 2022. There was new 10-year lows in this stock. I like this momentum move that it's had. It's had a big recovery. We're seeing a lot of leverage buying coming into this stock, which is very much a positive, but it's still 33% off its 2020 highs. So it's backed up, and coming into today, it was about 10% off the December 27 peak. So you're buying into a momentum stock on a pullback, and it's come back to the 50-day moving average, which you can use as support. So what I'm looking at here is a full V recovery on this little tiny, well, I guess it's not tiny, but this move that we've seen from the end of December to those highs, those highs at 51, a full V recovery targets 56. So there's a lot more upside here. And I'm looking at an April 42 call and an in-the-money option trading for about $7. It's about $5 in the money. It's got 4 months of time, a 75 delta, and I'm getting positioned. I think Intel is the sleeper. Now, it's not been a sleeper in the last year, but it's the big sleeper. If you compare it to NVIDIA, they're in that same space, and I think there could be some surprises. And that's what my charts are telling me, that some smart money sees the same thing.
Understood. Okay, so we have smart Ben who can take a look. What do you think, Ben?
Well, as much as it pains me, Nicole, to agree with Alan sometimes, I have to in this instance. He mentioned the end of December highs up around 51, recently down to a January low, but take a look here because we've just kind of range bound since. There's the end of December high I mentioned, January low, a little bit of weakness here on the short-term time frame. We've got a 30-minute candle chart queued up here, but you can see mostly just sideways, kind of hanging out around this $46, $47 level. So let's take a step back here, right? When in doubt, zoom out, we always say, and pretty well-defined trend off the October lows in this instance. Taking a look at the chart here, you can see bottom left to top right from 32 all the way up to that high we just identified at the end of December, up around 51. This is a 60-minute candle chart we've queued up here now, and I went ahead and identified some of the areas of consolidation that your eyes should be drawn to as you try and identify which way trend is moving, which way value is moving. In this instance, pretty easily identifiable to the upside. So we're currently balancing around 49 right now. As long as we hold above 44, I think that bullish narrative that Alan was laying out remains. What was the area, Alan, you were talking about? 56, I think he said. Should we take out that 51 level? Let's just take a step back here. I'm going to show you what's going on a bigger picture chart here. Now we've gone from 30-minute to an hourly to a daily candle chart. So we're looking at price activity going all the way back to the spring of 2021. And notice here, Nicole, we had been in a bit of a downtrend. If you take a look at the move we just looked at off the October lows, you're going to see the significance of it as I identify the areas of value that were being established on the way down. Again, in this downtrend, you can see 54, 48, 38, balancing around 29 into the beginning of last year, and the bears wanted to see us break out and form a new area of balance at a lower level. Look what happens instead. We form an area of consolidation around 35, which was still holding below this key area 38. Not what the bulls wanted to see, but eventually the more recent move. Look at this. We take out key areas and off to the races since. So again, a long-winded way of saying, yeah, I've got to agree with Alan on the bullish sentiment for this one.
All right. Alan, final thoughts on this?
Well, I'm trying to make it easy for everybody, so I picked a couple of stocks I knew Ben would agree with me on. So, we're all busy today. You've got to be patient in the markets because, we had such a big run, and you've got to find stocks that maybe have had a little bit of a pullback. And I still think that Intel is a diamond in the rough because, nobody looks at that as a major tech player, but they are when it comes to these chips that people are paying for speed. So it's a big, big deal. I think from a risk-reward standpoint, I like how it stands.
Yeah. All right. Next up is Micron, which we know these semis have been doing so well. Names like NVIDIA and AMD have been hitting highs. Micron 6 months is up 31%, hit a recent high of 87 and change. Has since pulled back. Your thoughts on Micron today, Alan?
Again, the same kind of thing. It's a strong stock that's off its highs. It's the 2022 top is at around, 15% above. It looked really good coming in today. Obviously, we see a pop in this whole sector, and that just shows the momentum. We've been between, that 88 high with this 80 low here. This V recovery sets up a target of 96. So I still see a lot of leverage buying, meaning the smart money is into the stock. So the way to jump on it here is with an April option as well, an April 75 call. It's trading for about 13.5, 14 or so. So it's a deep in the money option, and this is a stock that's up 50% in the last year. And so we pulled a little bit back, and you have to use these pullbacks to see how it holds some significant support levels. And you want to be using levels to lean on, but buying into the trend in a stock that's already established that even Ben thinks is in an uptrend.
Okay. Well, what do you think, Ben? I can hear Ben chuckling.
I think Alan brought a few key points to the discussion here. Let's begin with the fact that he identified an 85 to 81 range that we've been in. It's pretty easily identifiable on the chart behind me, and there's not a lot of conviction associated with this kind of price activity, right? You're overlapping rotational, you rally up, you sell off, and just kind of sawtooth type pattern it kind of makes me think of relative to that staircase type pattern that we look for. So not a lot of conviction one way or the other, well-defined upper and lower extremes. Once we break out, we'll tip the scales one way or the other possibly. Let's take a step back, when in doubt, zoom out, I always say. And in this instance, a pretty easily identifiable trend. Bottom left, top right, you can see a rally going back to the fall of last year. We were trading around 2022, I should say, fall of 22 and 2. We were trading around 45. 46 into the $50 level, and here as you look for areas of consolidation on this, again, daily candle chart. Whoops, hold on, this is the one I wanted to pull up. Your eye should be drawn to 4 of them, easily identifiable. Value moving to the upside. We've got 55, we've got 66, 76, currently balancing around 83. That's that kind of random price activity we were just looking at on the 5-minute candle chart, but all of these areas of value stacking up. That staircase type pattern establishing itself here to the upside. So we're trending higher, as Alan mentioned, very bullish type pattern. Also stepping back here, Nicole, I've got a weekly candle chart up in this instance, and let's just take a look at some of those areas of consolidation again that have formed at higher and higher levels, because it not only helps us determine trend, but it gives us a reference point to when that working assumption that we're trending higher is no longer a valid one. So let's break it down. $8 is where we were balancing out. You're talking all the way into 2012, 2013, where we rallied up, started to balance around 23. Again, wash, rinse, repeat. You can see these areas moving at higher and higher levels. We're currently balancing around 73. So open up the door. What did Alan talk about? 96 in this instance. I think open up the door for a retest here now for 98 with the strength we've recently seen. You don't want to see it below 43. A lot of wiggle room here, but definitely a bullish pattern, Nicole.
Okay, and you can see some of those top parts there. Alan, any final thoughts there on Micron?
I agree. The path of least resistance in a momentum stock like this is the high, and we're still, 15% away from that high. So you want to be able to buy in on a pause or a pullback, and this is often just, you can view a consolidation in a trending momentum stock as just a time for it to be gaining power, building power for that breakout in that pop.
All right, and then we'll get to Kinder Morgan, which actually had a double miss on its latest earnings report, and it's been selling off recently. Your thoughts on this name? Is this an opportunity, or you think it's heading lower?
It's a sideways stock, and I like sideways stocks, and I like to anticipate the breakout of that range. The longer something goes sideways, the greater the magnitude of that breakout. We've been between 15 and 20 since 2021, so that's about 3 years. And we got above the midpoint of that. We're right here at the midpoint at 1750. So typically, if you get to above the midpoint of that big range, then you get to the range top. Now, a range breakout, a break in about 20 sends us to 25. But in the minutia here, we can see we've been between 16 and 18 mostly for a year. So breakout of that target's 20 as well. And I saw bullish divergence in that October low, meaning it made new lows but not new highs and implied volatility. That's a sign of a sentiment shift. It's unchanged over the last 2 years, so it's got risk reward on it as well, and the leverage buying. So there's a number of positives here, and it's a low risk trade. Now, with a low risk, meaning the options are inexpensive, what you can do here is you can position for success, put a chip down. You can buy a January option, a January 15 call. Again, 15 is at the low end of the range for 2021. You can buy that for about $275, $250 or so, and that's $2 in the money. And the expiration break even is only 25 cents higher. Now, I said January. I need to be more clear. I mean January of 2025. So that's a year of time. My expiration break even is 25 cents above with a lot of upside. And I still think the oil sector, the energy sector has the best risk reward out there if the overall market's going to continue to move higher, which I definitely believe in.
And you certainly have some time for that trade too. Tell us, Ben, when you take a look at this chart, your thoughts, because he was noting how it's been a sideways kind of stock, and then what?
Yeah, he was also noting how he thought we'd go 3 for 3 today, and we are for the most part on this one. Now, the bigger picture, I still see a little bit of cracks in the dam here, some weakness, which we'll get into in a second, but let's just begin first and foremost with, well, Alan mentioned kind of a random, kind of chop type trade that's been playing out 15 to 20. I'll extend that a little bit to the upside in a minute on the more intermediate charts here, but you can see 18 recently down to 17, not a lot of conviction, right? We're coming off a bit here, but again, when in doubt, zoom out and let's do just that. You can see as we break away from that 5-minute candle chart and pull up an hourly candle chart, you start to see a little bit of momentum to the upside, because if you remember, it was just October of last year. We were trading just below 16, a nice rally up to 1780 before a retest of that level. So a bit of a double bottom there. And then we're off to the races here up to 1824. It does look to me like we have two areas on this chart, areas where the market's kind of consolidating around and just kind of establishing a bit of random rotational type price activity without a lot of conviction. Currently balancing around 1780. As long as we hold up above 1660, we are still seeing value move higher and momentum to the upside, and again, a bullish pattern playing out. But let's take a step back here, because you're going to kind of flip this chart over when we step away from the hourly candles and look at the weekly. Now, Alan mentioned back to since 2021, we've been holding basically, again, below that 20 and above. What did he say? 15. Again, you could really extend that out. Well, here's the 2021 lows now that I look at it. So it is right around 15. Pandemic lows around 942. But notice how that took out the lows that we saw back in the end of 2015, beginning of 2016. Not a lot of follow through down there, right? We actually rejected that lower level. Here you can see, though, for the most part, we've mostly been sideways and kind of rotational around 16 after coming off from the balance we formed into the beginning of 2016, the big move lower that we saw 2016, the breakdown from 36. So sideways here right now, Nicole, in this range, looking for a breakout. This is actually still kind of bearish, but at this point, the stock's been a little bit overdone to the downside, I feel like, and there's definitely, again, much like we were just talking about in terms of Micron, a little wiggle room within this range here that we've established, a stock that's not unfamiliar by any means with overlapping rotational kind of random range-bound type price activity.
All right. Thank you both for a great big three. Intel, Micron, Kinder Morgan, Alan Nuckman, bullseyeoption.com. Thank you. Have a safe flight. Ben Lichtenstein on the charts there. Thank you as well.